Greetings fellow traders, welcome to Stoic Capital. Today we'll be talking about SMT divergence and trying to explain it deeply. Okay, so first things first, what is divergence? Divergence occurs when two or more related variables or indicators move in opposite directions instead of following the expected or usual pattern. It can be observed in various contexts such as divergence between stock prices and market indicators, or divergence between economic indicators and market expectations. So it's a broad term. But for today, we'll be strictly focusing on SMT divergence. SMT divergence, SMT being smart money technique. SMT divergence occurs when two or more strongly correlated assets move in opposite directions instead of following the expected price pattern. So I have a few examples of strongly correlated assets: NAS 100, SPX 500, Euro USD and GBP USD, GBP JPY and CAD JPY, Bitcoin and Ethereum. So when these start opposing each other in price movements, that is what we call SMT divergence. Okay, on the left we have GBP USD, on the right Euro USD, and if we follow these charts that I've drawn using market structure, we're making lower lows, lower highs, lower lows, lower highs, lower lows. Then we have a market structure shift and we make a higher high, then a higher low. So as you can see, both assets look exactly the same, and this is how it's supposed to look majority of the time. Okay, so let's look at Euro USD. If Euro USD makes a higher low instead of a lower low, we will have our SMT divergence. Then what you're gonna want to do is to take a line, the trend line, and mark out the SMT divergence on both charts so you can have it in your mind. And also, if you look here closely, you will see that it can happen with more assets. Like now it's ES and NQ on the left against the Dow Jones on the right, so it can be three assets even. The important thing is to remember that it is not a reason to enter a trade, but only a trade confluence. If you look carefully, on the top is that we have Euro USD, on the bottom we have GBP USD. So if you look closely, you will realize that there's diverging slightly. On Euro USD we have a lower low, but on GBP USD we failed to make that lower low. So we have a higher low, So that is our divergence. So again, we do not enter there, we solely use it as a confirmation. So you look for past points of interest such as fair value gaps or order blocks, any PDRA honestly. I look for SMT, then a market structure shift, and I enter on a fair value gap after that. I'll show you in my journal. I'm here in my Notion journal. I have Dow Jones opened here. This is a past trade that I took personally. If you look that we failed to make a lower low. I trade the Judas swing, the opening range from 9:30 to 10:30. So if you look there, we failed to make a lower low. Okay, so now I'm on Nasdaq. I take my positions on the asset that goes lower. So on Nasdaq, we did make that lower low. So what I did was I waited for market structure shift going up, and once I had that, I marked up my fair value gap and my breaker block. And when price came back, I took my entry with my stop loss just behind the previous candle. That's how I set my stop loss all the time. And I went for 1 to 3. Here's another example. On Nasdaq, we took out liquidity. that's far out on the left, but we also took out the current liquidity up top, so we made a higher high. Here on SPX 500 we failed to take out the buy side liquidity at the back, unlike on Nasdaq where we were able to take it out. So just like before, I waited for a market structure shift throughout my breaker block and my fair value gap, and when price came back I took my entry with my stop loss behind the previous two candles. So this is my summary on SMT Divergence. If you have any questions, be sure to ask, any comments, and that's it for the video. Please don't forget to like, put on the bell notification because I'll be releasing something similar next week, and subscribe. Thank you.